Hello guys, so in this class I want to teach you the simple way to do top-down analysis. So what do we mean when we say top-down analysis? Top-down analysis is simply teaching you how to trade, how to study the market from higher time frame all the way down to lower time frame, helping you to get high probability trades. High probability trades. Now, for top-down analysis, you want to ensure that you start from the monthly time frame all the way down to your lower time frame. So I've said it in our trend line class, or I think our trend line breakout class, that we have monthly time frame to 4 hours time frame as our higher time frame. Then we have 4 hours time frame to 30 minutes time frame as our lower time frame. Then we have 15 minutes time frame to 1 minute time frame as our entry time frame. So most times this top down analysis is mostly done for strategies like trend line strategies, trend line breakout strategies, where you are analyzing the trend all the way from monthly time frame and are trying to catch all the movements that is going to happen all the way from monthly time frame down to like the 4 hours, the daily time frame, or the 30 minutes time frame, the 5 minutes time frame. Now let's go to monthly time frame and start our analysis. Let's do top down analysis all the way from the monthly time frame. So on the monthly time frame, we can see here that we have a trend line coming point A, point B, point 1, point 2, all the way down. So we have the trend line something like this. We can decide to pick here as our point A, point B, points all the way down to here. So we already have months of data now just by drawing this trend line, knowing that the market is in a sell trend. So if we're having point A, point B, point 1, or entry 1, and we have like entry 2, entry 3, we now know that this is a candle for representing a month of transaction. So for this month, we know that we have sell trade all the way down for over 7 to 8 to 10 months. We are expecting the market to continue selling all the way down. The same thing for this area, the same thing for this area, because we are in a sell trend. So what we now want to do, since we've known that for the next 10 months we are going to be selling, we now go down to like weekly time frame. Let me go back to that monthly time frame. Another thing again is that you don't want analysis that you are doing on your higher time frame to show on your lower time frame, to show on your higher time frame. So you don't want your hours analysis, your minutes analysis to be showing on your weekly and your monthly time frame. But for this example, I'm going to show you everything I just talked about. Now let's go down to weekly time frame. You can see it on the weekly time frame. We have all of these cells, which means that each candle is showing a week representation, 1 week representation of price. So if we were to be selling, we would have been selling every week till this very period where the market now broke this low. So if you've taken our advanced class, you might understand some of what I'm teaching you here. If you've taken our advanced class, you might understand some of what I'm teaching you. So till the market broke this low, and now we would have been able to sell week in, week out till the market broke this low. Now we go down to daily time frame. We already done analysis like from monthly to the weekly. Now we are going down to the daily time frame. So this is what we call top down analysis. Let's mark this on our daily time frame so that we can be able to see it on our daily time frame. We go down to the daily time frame. We have this area. So we know that this area is an area of support, turn, resistance in the past. All these areas support, turn, resistance in the past, and we saw it play out here as support, turn, resistance. So if we're doing top down analysis, once we have gotten our top down analysis for this area, we would have been able to sell from all these areas, support, turn, resistance, and break out here again, resistance turn support, continue buying, and the same thing happened around here again too. So we've done our daily time frame analysis. We can see that on daily time frame we had something like a range here in the market. Let me use this to describe the range. We have something like a range here in the market around here. You can see it. So when I was teaching you chart pattern trading, I taught you this bullish flag chart pattern, and you see as market continue to break down to this bullish flag pattern using confluence to trade, we can see that we would have been able to get a good entry after the market started breaking down through this bullish flag pattern. And we know that for the next few days the market was going to continue selling based on bullish flag pattern. Then we go down to 4 hours time frame again. Let's go back and ensure that whatever we drew here is showing on our 4 hours time frame. See, it's not showing. I want to make it show on our 4 hours time. But once we are drawing on the lower time frame, we don't want to see it on weekly and monthly time frame because it's going to distort our analysis on our higher time frame. So remember, we are still teaching top-down analysis. So on the 4 hours time frame, what can we see on the 4 hours time frame? We saw that this trend broke out. So those trading trend line breakout trading strategy, you can see that this trend broke out around here, somewhere around here, broke out for you. So if you were trading breakout strategy, you would have been able to trade this trend line breakouts from here. And like I said, you don't want what we are doing on our lower time frame to show on our higher time frame because it's going to distort our bias or our analysis on our higher time frame. So who was trading trend line breakout strategy could have traded from here and known that because we have a monthly trend line, which is this trend line here that's coming all the way from here, because we have a monthly trend line, we have a daily bullish flag. We use that as our confluence. As we are getting this breakout, we know that the market is going to continue all the way down to this area. So that would have been a very lovely way to trade. Every day we would have looked for a sell trade. So let me just like say, based on higher time frame bias, we're trading trend line breakout. We have something like this expected, something like this that we're expecting. So this is a complete 500 pips move. So you want to catch all of these 500 pips move as you even go lower to lower time frame. You want to catch it in bits, maybe in bits of 50 pips. You want to catch it in bits of 100 pips, so like 5 entries. Bits of 50 pips, so that be like 10 entries. So what do? We go down to 1 hour time frame. Still on top down analysis trading, we go down to 1 hour time frame. On 1 hour time frame, we can clearly see that this is forming a trend here. This is forming a trend. But I've been able to draw the trend like this as time went by. So I've been able to draw the trend like this. So we see now on 1 hour time frame, we're continuing to catch this movement. If we had even caught this internal trend line here, we would have caught good trades. We would have been able to catch the breakout of this internal trend line. We would have been able to catch this movement. And since we know that on our higher time frame bias, we still expect the market to sell to this very level, we can know that the time will come after taking some high, we would be expecting the market to continue pushing back. And we got the pushback here when Trump won election in the United States. The market's US dollar strengthened and the market Euro USD failed. So if the market for Euro USD now, because Euro is the base currency, meaning that Euro is what this chart as a whole is talking about. So meaning if we see the market going bearish, meaning that the Euro currency is going weak or is getting weak. If you see the market going bullish, meaning that the Euro currency, being the base currency, is going strong. For example, USD JPY now, if you see the market going up on where USD is the base currency, the first currency, meaning that USD is what this chart will be talking about, and in comparison with the one behind, that is the next pair or the next currency behind. So for USD JPY, for example, if the market is going up, meaning that the US dollar is strengthening and the JPY is falling. But for Euro USD, the market is going down, meaning that the Euro is falling and the US dollar is strengthening. That's why we saw this spike down when Trump won election, made the dollar strengthen, and saw that the Euro USD fell by over 150 pips. I think I was present that day and I traded it. The market fell by over 100 and look, over 200 pips in less than 2 days, or in a single day. The market fell over 200 pips just because Trump won election and the dollar strengthened. So back to our top-down analysis, we can now see that for all our higher time frame buyers and our lower time frame buyers, before we even start getting to entry time frame buyers, we already have the future telling us that in the next months to come, the market will continue selling. So we want to look for only sell entries as we go down to our lower time frame buyers all the way down to our entry time frame buyers, and look for only possible sell entries that we can take in relation to the market's higher time frame direction. So we keep looking for sell entries based on our trading strategy. If we are looking for SMA and MACD trading strategy, we are still looking for sell entries. If we are using trend line trading strategy, we are still looking for sell entries. If we are using support and resistance trading strategy, we are still going to be looking for sell entries, because we know that on higher time frame we already have sell buyers that is projecting a sell movement all the way to the future, like 6 months, 7 months from now. So for the next 6-7 months we should be looking for sell entries. And even if we have a pullback, we want to be looking for areas where the market stop pulling back and continuing the sell entry. Even if we have a pullback here, let's say we have a pullback from these areas now as the market is pulling back. Let's say we start having a pullback around all of this area, we get the market to pull back all the way down here and continue. We know that it's still a lower time frame analysis. So what this simply means that the higher time frame analysis supersedes lower time frame analysis, or is stronger than lower time frame analysis, and lower time frame analysis is stronger than entry time frame analysis. So if we have a sell on our higher time frame analysis, we know that it's going to influence whatever we have on our lower time frame analysis, and if we have a sell on our lower time frame analysis, it's going to influence whatever we have on our entry time frame analysis, and vice versa. But what's happening on our lower time frame analysis might not necessarily change what's happening on our higher time frame analysis, or otherwise our lower time frame analysis. What we're having on our entry time frame analysis might not necessarily change what we're having on our lower time frame analysis and on our higher time frame analysis. That is why using top-down analysis, trying to know what is happening on higher time frame analysis first, then going down to lower time frame to catch the same move, knowing if it's a pullback or a continuation of what is happening on our higher time frame bias, would help you to get high probability trades. So if your trading strategy was winning 60% of the time, you can move your win rate to 70%, 80% by simply doing top-down analysis and trying to trade along with the higher time frame analysis or the higher time frame bias all the way down to the lower time frame or the entry time frame bias. So that's that for top-down analysis. Whichever strategy you are using, you just want to ensure that your higher time frame bias and your entries are in line with your higher time frame bias. Have a nice day, guys.